week, Secretary of Education Linda McMahon announced that starting May 5th, the government would resume collections of individuals who have defaulted on their student loans, a move that would affect almost 2 million borrowers. This move, of course, is in stark contrast to the Biden administration, which forgave almost $200 million in student loans over 5 million borrowers. McMahon criticized former President Biden's student loan policies in the Wall Street Journal op-ed, calling his model unsustainable. So, what should student loan borrowers know ahead of the Education Department's move to resume collection on defaulted loans? We're going to find out for you right now. To discuss with me is Betsy Mayotte, president and founder of the Institute of Student Loan Advisors. Hello there, Betsy.
Why, hello.
Why, hello. Okay, let's just start right off. Boy, oh boy, if you're somebody with a student loan, you've been swung both directions over the last few years, haven't you?
Yes, sir. It has been, listen, I've been working in student loan compliance and advocacy since the earth cooled. And I can say without being overly dramatic that this is the most chaotic time in the history of student loans.
Yeah.
So to put it simply, if I have a loan, let's say I borrowed $50,000, I have that loan, what's going to happen to me? What should I do?
Well, unless you're one of the approximately 5 million borrowers that are in default on their federal student loan, and if that's the case, by the way, you were probably in default pre-COVID, then nothing's going to happen to you. But if you are one of the 5 million that their loans are actually in default, and I think it's important that we define that in a second, then you are at risk to have your wages garnished, your tax refund taken. Even if you're on Social Security, they can garnish your Social Security.
Okay, so let's get back to what you were saying. Define these different terms that we're talking about.
Yeah, so federal student loans are kind of a unique animal. I call them the marsupial of the consumer debt world because they act really different than other types of consumer debt. If you're past due on your loan, meaning you missed a payment, or maybe you missed 3 payments, maybe you missed 6 payments, this isn't going to affect you. Default on a federal student loan is until you've actually missed your 270 days past due or more, and the loan has been transferred over to the Department of Education's collection agency. Now, if you're not sure if that's you, there's an easy way to find out. If you log into studentaid.gov, it will tell you. There will be like a danger Will Robinson red flag, and it will say the word default. But if you're past due just, like a couple months, or you're in forbearance, or if you're in a lower payment option, then you are not in default, and this is not going to affect you.
Let me take you back a little bit to this whole concern over these student loans to begin with, which led to the Biden administration doing what they were doing, which is the idea that, and correct me where I go wrong on this, that these student loans became unfair because of the interest structures that were built into them, and they were burdening people. I guess because most times you want to think you borrowed money, pay the money back. But the curiosity in these student loans was it wasn't quite that simple, that they felt that the interest compounded on it and the way it was done to students was putting them at an unfair disadvantage. Do I have that right?
You do, but boy, is it complicated. How much time we got? 3-4 hours?
Yeah.
So listen, part of what we're seeing with student loans is, that old expression, the road to hell is paved with good intentions. Back prior to 2009, there weren't a lot of viable, for example, payment plans based on your income. And so they saw that borrowers were struggling, and they said, hey, let's make these payment plans based on income so they're affordable. And everyone said, great. But then what we saw happening is people making their payments every month, the payment amount they're being told to make that's based on their income, and yet their balance was going up rather than down because their payment was not enough to cover the interest. We also have seen a significant rise in the cost of education over the last 25 years. We talk about the student debt crisis, and it's a thing, but that's the symptom. The cause is the cost of education. And then there were other factors. If you couldn't pay and you had to ask for a deferment of forbearance, that's great. They'd pause your payments, but any accrued interest would get added to your principal. Now, the Biden administration attempted to ameliorate some of those things. They tried to create a payment plan that was not only based on income, but also made sure your balance wouldn't increase over time. They got rid of most instances where interest could be added to your principal balance. So, again, they did attempt to ameliorate some of that stuff, but we still have the core issue, which is the cost of education. I mean, even if he'd been successful in his loan forgiveness plans, that would have been great, but the loans would have just started accruing again the very next day.
So the Biden plan, that wasn't just getting rid of the loan completely. It was just making it more affordable for you. Is that what I'm hearing?
Well, he tried a bunch of stuff.
Yeah.
He tried to do some broad forgiveness. Both of those attempts got killed in the courts. And then he tried to create a new repayment plan called SAVE. And SAVE not only created a lower payment for many borrowers, but again, made it so if you made your payment, they forgave any interest that wasn't covered by your payment. So you weren't seeing your balance go up. And unfortunately, 13 attorneys generals filed suit against that, saying that he exceeded his authority. And that plan, although they haven't buried the body yet, that plan is dead.
We want to remind everybody we are speaking with Betsy Mayotte about student loans, and you can join the conversation at 713-440-8870.
So now let's move ahead to where we are with the Trump administration and what they're talking about doing now that we have the background of what was going on during Biden. And I guess where I would start in all of this, if you have defaulted on your loans, there's probably a reason you're defaulting to begin with. But take me through what this plan is now.
Yeah. So, to be clear, or to be fair, they were going to resume collecting on defaulted student loans regardless of who won the election. In fact, I actually thought the Biden administration was going to start back in January, and for whatever reason, they didn't. The Secretary of Education is required to collect on these loans. These are debts owed to the federal taxpayer. So this was going to happen regardless. They've been on pause for 5 years. Borrowers who are in default will receive a letter or phone call or an email or all of those things, letting them know that what we call involuntary collections, which is the wage garnishment and tax refund offset, will be starting soon unless they do something to start paying on this defaulted loan, or better yet, resolve the default altogether.
Mm-hmm. I have seen some that suggest students or past students, those with these debts, file bankruptcy. Is that a logical next step for some of these folks?
Not necessarily. I'm glad you asked the question, though, because there's still a myth out there that student loans cannot be discharged in bankruptcy. And they can. It's not easy, but it's not impossible. Excuse me. Better steps for many borrowers might be to what we call rehabilitate the loan out of default, which would put the loan back in good standing. And then the borrower would be eligible for these payment plans based on income, or maybe even forgiveness under something like public service loan forgiveness. Rehab also removes the default line from their credit report like it was never there, which is another benefit. They can also consolidate out of default, which doesn't have all the benefits of rehab, but it still puts the loan back in good standing. And now you're eligible for these lower payment options.
It fascinates me. I'm curious, though, the interest structure. Has that remained the same now? These huge interests on top of that make these loans get so big. Has that been adjusted? Is there any movement there to make it more manageable?
Congress hasn't changed the interest rate structure in years. They may as part of budget reconciliation, but historically, anytime they change the interest structure on student loans, it's only for loans made on or after the date of any such legislation. Interest rates right now are fixed. If your federal student loan is 2006 or newer, you have a fixed interest rate, and that rate's based on basically what the market was doing at the time you took the loan out. Mm-hmm. They're usually based on 90-day Treasury bills or 52-week Treasury bills. The fact that interest can be added to your principal, as I mentioned, the Biden administration got rid of all the situations where that could happen except for two. And those two remaining are in federal law. And actually, there's chatter that Congress might get rid of those two as well.
Which, Betsy, the Trump administration keeps saying what President Biden did with student loan forgiveness was illegal. Was that illegal, what he was doing?
All right. I'm not an attorney. I'm just a student loan nerd. The courts have stated that the two broad attempts at forgiveness were illegal. And they're much smarter than I am. And then the SAVE plan, the courts, although that, again, that litigation is not over yet, there's a very strong indication that the courts are going to indicate that SAVE plan also exceeded that authority. But the Biden administration did other things with forgiveness that were legal and did benefit a lot of people. They took a lot of the administrative nonsense out of the public service loan forgiveness program, allowing borrowers that should have been eligible before to get that benefit, which again is in federal law. It was actually passed by a Republican president. They got rid of a lot of the administrative nonsense that blocked people that are totally permanently disabled from getting their loans discharged. So, and those things have been deemed to be legal.
So, Betsy, where we are now, if you were asked, what would you tell the government they should do to fix this problem? I know we have 3 hours left. I'm just in a nutshell. I mean, there's got to be some kind of quick advice.
Yeah, I mean, listen, I go back to what I said a second ago. The student debt crisis is real, and we need to address that. And I have a couple thoughts there. But if we really want to solve this forever, we got to fix the cost of education thing. Because again, no matter what we do with the student loans, they're gonna keep going. And student loans are not necessarily a bad thing, but they should be a step up, not a setup. And for some people, it appears to be like a setup. As far as the student loan goes, one of the biggest things that this administration can do, and this is something that I've been saying for years, is to increase the level of transparency. So, the biggest issue right now is the unknown with borrowers because things are so chaotic. And I get that there's some things they can't say publicly for litigation reasons or whatever, but they do have the ability to be a lot more transparent. Also making sure that the people on the front lines, the call centers at the servicers, that they're well informed, so they can give borrowers the best advice. We're in the chaos because of that SAVE plan. Since we know the SAVE plan is dead, ensuring that whatever replaces the SAVE plan is something that's manageable for borrowers so they can, pay their loans as agreed, but do it in a way that still allows them to feed and clothe themselves. And finally, I would make sure that they weren't causing any anxiety around plans that are set into law by Congress. And therefore the borrowers have rights to those plans if they fulfill the eligibility for them. That's
a quick question. If I'm one of those students and I've gone onto the website and I see the big red warning that I have defaulted on my student loan, what should I do?
There's on that same website where you're seeing that Danger Will Robinson flag, there's going to be contact information over who is holding that loan. Get in touch with them and talk to them about loan rehabilitation or consolidation. And even better, before you do that, on that same website, you can look up to see how rehab and consolidation works. So you're informed already when you're talking to these people and can feel confident about the conversation that you're having.
Speaking of talking to people and having a conversation, we always invite the audience at 713-440-8870 to join in. And Josh is doing that right now from Cyprus. Josh, what's on your mind?
Yes, hello.
Hello. I think it's Jose.
Jose.
Sorry. Hello, Jose.
It's interesting because I proposed to my fiance to get married in a couple of months. But then after that, I find out that she has a huge student loan. I have a huge student loan myself. So now I'm debating, I'm going to go into marriage with a lot of debt. So I think it's a serious situation going on out there with that student loan. And what irritated me is that our government is giving billions and billions of dollars to those countries who are fighting war, and they're not addressing this situation here at home.
Jose, thank you for that. First of all, though, congratulations on your engagement, and I hope that this loan or this debt didn't sway your love. But thank you for sharing that with us. Betsy, any comments on that?
Yeah, so the first thing that came to mind is, my grandparents were married for 69 years, and when people used to ask them what the secret of their success was, one of the things my grandfather used to say was, when money goes out the door, love goes out the window. So, Jose, I hope that's not the case for you and your fiance. Congratulations. Piece of advice, though, assuming that she has federal student loans, make sure that when you file your taxes after you're married, if you file your taxes as married, filing separately, they will only take her income into account on her payment plan, assuming she's on a plan that's based on her income. So that's something to look into.
Good advice. Thank you for that.
That's right. Betsy Mayotte is the president and founder of the Institute of Student Loan Advisors. Betsy, thank you so much for joining us on Hello Houston.
My pleasure.
Coming up.